Hey everybody, it's Hank Winchester. Help me, Hank. We are here on Local 4 Plus. We appreciate you logging on, tuning in, joining the conversation. We have a lot to get to today. We're going to be talking with Dewey Steffen, CEO of Great Lakes Wealth. We're talking about the markets, what you should be budgeting for, preparing for the holidays, all the good money stuff that you need to know. We're also going to hear from Michigan Attorney General Dana Nessel. She's talking about election misinformation and providing all of us with key information that we need to know to prepare to vote November 5th. The AG working in tandem with the Secretary of State, and the focus there and the goal is to make sure that we have a safe, secure election. You're going to hear from the AG and also learn how you can get in touch with her directly should you encounter any problems either now or on election day itself. And then we're also going to be talking today about fake utility scams. You may have heard about this unbelievable, heinous crime taking place in Rochester Hills. A man was killed after he had let in somebody who he thought was a DTE employee. As you will see, they were duped, sadly, by this scam, and now DTE working with Help Me Hank so we can provide you with critical information to keep you and your family safe if a stranger shows up at your door. All of that and much more coming up here on Local 4 Plus. As I mentioned at the top, we are joined now here live with Dewey Steffen. He is the CEO of Great Lakes Wealth. Dewey, how you doing?
Hey, good to see you.
Good to see you too. Okay, so let's get right to it. We're talking money because the reality is that as much as we hear, especially during the election cycle, everybody's blaming somebody else for either unemployment or the numbers being bad, you name it. It's the rhetoric we've got to deal with right now. But at the end of the day, the market has been performing exceptionally well. What is driving that right now?
Well, right now it's really a sense of security or understanding. We say a lot that Wall Street hates uncertainty. And so when you have uncertain moments, and we see them throughout the year, you'll see the stock market ebb and flow and worry and panic based upon uncertainty. And we have the election November 5th. There's some uncertainty there, not just with the presidential candidate election, but also for Congress as well. So there's uncertainty to a degree, but the main thing that's now certain, the Federal Reserve has come into play. They cut rates at their last meeting. They've said they're going to be accommodative moving forward and cutting rates some more. Wall Street recognizes that as certain. And at the end of the day,
meaning that we know it's going to happen eventually.
Absolutely.
Yeah.
And there can be a pivot. There can be something that changes it, but their path is now even lower rates. And we always say in Wall Street, don't fight the Fed. If the Fed is being accommodative, you need to jump on board. If the Fed is raising rates to slow things down, that has a different effect. So at the end of the day, we think, and Wall Street right now believes that the Fed will be able to orchestrate what we call a soft landing, maybe bypassing a recession.
So what does that mean, though, for somebody, people that are watching us right now? If they want to buy a house, if they're worried about credit card debt, do we see this all as, positive news that mortgage rates will be coming down? And if so, how long will it take before we actually see it?
Well, we think it's positive in terms of the economy, right? The national economy of being sound and in a good place. Inflation has also come down from north of 9% just a year ago back down to under 3%. So inflation, although there are some parts that we would argue are not back to, prices 2 years ago, in general, inflation by mandatory acknowledgement of numbers from DC is in check. And so if inflation is down and everything else is fine, the economy, again, we're all fine. So to answer your question, it depends. If you're a borrower, then interest rates will be coming down. That'll help you with any purchases you're making.
Like a home, car loan, your credit card interest rate possibly, all of that could trickle down.
That will trickle down. So again, the home is the big one. You get a home and interest rates are 7 versus 5. Yes, it's not the 3 they were a few years ago, but that's a big difference. The other side of it, though, if you're a retiree and if any of your viewers are retirees, that's a different deal because you were getting 5 or 6% in the last year in your bank accounts, in your safe investments. Those are now going to come back down to 4% or 5%. So you'll have to live on less interest and find other ways to subsidize your income.
Do we think that we will ever see rates get down to the historic lows that we saw them? I mean, there were some people getting in and I did at that point, but I had to buy a house a few years after that, so I got hit with it the other way. But I can remember refinancing at one point, and I think it was under 3%. Will we ever be at that point again?
Not unless we have a national or international situation like COVID.
A pandemic
or something similar that rocks the entire world. So we hope not. As long as you're making more interest on your investments or your livelihood of income than you are paying with your debt service, your interest rates on your home and your cars, as long as that's lower than what you're making with your interest, then that's how you win the game.
You know, inflation is down. The unemployment report, the jobs report, they've been really positive during the last few cycles, but we still hear from people all the time who are struggling, who are living paycheck to paycheck, who are concerned about the price of gas to groceries, you name it. What should people be doing then right now? I mean, how critical is it to, even if you don't have a lot of extra income, to at least look at your finances and get on some sort of a budget?
That's the key word, budget. And so it doesn't matter whether you're poor, middle class, or uber wealthy. You need to have a budget and stick to your budget. And it could be a budget of huge spending. It could be a huge budget of saving. But absolutely, you need to start with a budget because everything is uncertain. Inflation is technically, let's say, 3%. But some things like medicines and other prescriptions are over 10%. Other things like last year's TVs are at a lower price. So you need to understand what it is you're trying to accomplish, but start with that budget for sure.
But that budget gets really tricky as we enter, like, you know, I've already spent a fortune on Halloween because my daughter wants 3 different costumes for 5 different events, and then you've got to buy all the candy, and candy prices are up 10%. Then you roll right into Thanksgiving. Thanksgiving meal costs a fortune, and then you're buying for the holidays. So how do you handle, you know, kind of getting into the last quarter of the year when we're all spending so much?
So you have to have a budget and stick to it. Your daughter doesn't get 3 costumes. She can have
you
one.
come over, Dewey,
Okay.
and you tell Emma she does not get 3 costumes.
I understand. So you have to understand it. You have to make changes where changes need to be met. And so you also can have an emergency fund. We always say even before you invest or deal with debt, which is also repurposing your debt, is also to have 3 to 6 months of living expenses stashed away for a rainy day. And in the last year or two, you've been able to earn about 5% on that cash in a high yield savings account. But to the point we talked about earlier, I don't care whether it's Emma with 3 costumes, knock it down to 2.
Yeah.
If it's the candy that you buy, just be responsible and shop around, okay?
Yeah, I mean, what we've done, honestly, tip for the costumes is because she'll have one group that will be her soccer team, another school. So in the neighborhood, we'll swap costumes. So like she'll take the little girl down the street's princess costume and that girl gets a Ninja Turtle costume. So it all kind of works itself out.
That's fantastic.
All right, budget, right?
Budget, budget, budget. And more importantly than a budget, stick to the budget.
That's the hardest part. It's like a diet. You can say you're going to be on a diet, but you have to stick to the diet.
Understand, but whether it's Thanksgiving and the food, understand what things cost. But as we get into the holidays and shopping, have a budget for each person that you're shopping for. Whether it's $50, get them a gift card. If it's something else, then just shop early and look for deals.
Okay. All right. Dewey Steffen, CEO of Great Lakes Wealth. We appreciate your time as always.
My pleasure. Thanks for having me.
Thank you, Dewey.